Good morning, everybody. Happy Monday. Happy Monday. Hope everyone had a great weekend. Looking forward to a productive and hopefully profitable week. Got a lot of earnings this week, and that will certainly bring some opportunities that we will take advantage of and also will be able to share here in our morning call and, of course, in real time with our members each day. So thanks for being here. Excuse me. We're going to get started in just a second. Maybe just a couple of you could quickly let me know how your audio and visual is, and then we'll get started here in just a sec. Alrighty. Cool, thank you. All right, let's get started. All right, perfect. Yes, good morning. Daily Trader is taking the words out of my mouth. We are starting with our 3-day boot camp in about almost exactly 2 hours from now. I'll talk more about that in a minute. First of all, I want to welcome everybody. Happy Monday morning. It's here. We're attacking the second to, let me see, look at the calendar here. Yeah, this is the second last week in the month of July. And, things are likely going to heat up a little bit here, not just temperature-wise outside. Hopefully it's getting cooler slowly at some point. But more importantly here for the markets, which, of course, what we're talking about, we've got earnings season kicking off. So thanks for being here. This is our morning call, Set the Market. My name is Serge Berger from thesteadytrader.com. We do this morning call Monday through Thursday. It's about 10, 15. Usually it's more like 15 plus minus minutes. We're going to go through the top few things on my notepad, and we are going to get started with that here in just a second. Also, just want to quickly make sure that everyone is that's new here, that you get a chance to hit the subscribe and like button that allows you to be updated in real time with our analysis. And if you could also like every time you watch our videos, that would allow us to be able to continue to do the shows that the algorithms pick it up. Because if they don't pick it up, we at some point will have to stop doing this show. I have to always just remind myself out loud about that. So let's talk about the top few things here in just a second. There is a just quick reminder I wanted to show to people. We are starting with our 3-day boot camp, which starts again in less than 2 hours from now. And I wanted to just show you this as a last chance to be able to enter if you haven't done so yet. We go for about an hour and a half each day. So today, tomorrow, and Wednesday. Here is the link for that. I guess I can type this in the thing. If you want to take advantage of that and join us in our boot camp, you also get a free momentum indicator. Well, it's not free. You get it with the purchase of the ticket. If you have joined a boot camp before, you are just going to pay $99. If you've never joined a boot camp before, it's $199 because you also then receive for life the momentum indicator. That's included with the package, including Bitcoin brackets, and a whole bunch of other goodies. We're going to spend day one today talking a lot about momentum, how to trade momentum using stocks, ETFs, futures, both intraday and certainly swing trading. We will then move on and give everyone our portfolio that's been beating the S&P 500 for 5 years straight. And the reason why 5 years matters is because the S&P for 5 years has been going vertical, and our portfolio is completely different and has done better. And year to date too. In fact, it had no drawdown year to date. Then tomorrow on Tuesday, we're going to talk about how to use extremely overbought and oversold conditions. Again, we're going to use derivatives with that as well, including stocks and ETFs and futures. And on day 3, we can talk about trend following. So that's all in store starting today at 11 o'clock. If you want to grab a ticket, if you haven't done so yet, the the link is there in the chat box. Now, the next thing I want to quickly do is I want to show you something here that we have been working on. I'd love to get a poll on this. So if you have a interest in joining us at our next in-person event, okay? So what we are currently doing is we are talking to our clients about doing another in-person event. So that's coming up. That's to be determined. We're either going to do it in October or in January. And so I would love just a quick feedback. If you guys can do it here, if you want to, you can also email our team. Let us know what of the following 3 events is most interesting to you. So one thing we were thinking of was meeting up maybe in October in New York City, doing a 3-day in-person thing, but also focusing, and it'll be very topical to the time as well, but also taking a trip to maybe a hedge fund and some other institution. So we would be literally going to a trading floor and doing some other fun stuff. So that's one. And of course, the actual, trading for 3 days, trading together live in person in New York City. That's option number 1. So keep that in mind. There's 2 more, and then let us know 1, 2, or 3. Number 2 would be a event that would include golf, maybe for those people who don't play golf, maybe some tennis. We probably also see if we can do that in October. We'll do it somewhere nice, a nice country club, something like that. Same thing. We'll play some golf, play some tennis, and then be together, trade live for 3 days. That's number 2. And the third thing would be to do a trip in January, probably to Davos, Switzerland. So right after the World Economic Forum, probably like the weekend or so after, which happens in the middle of January, so the weekend after. And we would do a ski, snowboard, cross country, hiking, whatever you like to do in the winter thing. And we would do that. And the same thing with trading. So it'd be 3-day live trading, skiing, snowboarding, whatever you like to do in the winter, even just hiking or walking, right? That's thing. So if anyone has an idea of which one of these 3 things you prefer, let us know here over the next few minutes while we're doing this show. And also, you can also send us an email. That would really help us get some feedback. We've been getting dozens and dozens of emails over the past, I don't know, I'm going to say few months of people asking, hey, we want to do a live event again. It usually happens around the summertime. People start thinking the second half of the year. So let us know what we like to do. Okay, we're gonna do something outdoorsy. I'm gonna be honest with you, I really don't want to do Las Vegas. I've done that for too long, and the problem is a lot of people, as much as I like Vegas, a lot of people don't like Vegas, and quite frankly, everyone does it. So I would like to do something a bit funnier, more fun than that. So anyway, that's what we're thinking of. Now let's move on to the markets here today, and here is the lineup that we've got going on in terms of the markets. All right. So, first thing we need to, not everyone likes New York City, Bill. That's why we're also doing Davos, right? And if you guys don't want to do any of them, don't do any of them, right? We're just offering here something that we think could be fun for everyone to do. So, what we're looking at today is really some moves that we've been talking about for quite some time, which is basically in the crypto world. So, over the past 2 weeks, I think we've been talking about looking at a trade that would take advantage of Ethereum catching up to Bitcoin. And I should also mention, right, this is not a crypto show, but we like to see where there's opportunity to make money. And so one way we can do this is by looking at the relative strength or weakness of one thing versus another. And a lot of people, of course, also would be interested in knowing that this stuff can be done with ETFs, right? So, ETH, for example, is the Ethereum ETF, or IBIT would be one of the Bitcoin ETFs. And so what we showed a couple of weeks ago, and I just want to give everyone a bit of an update on what's going on here. And our analyst at JB, my colleague, he's been posting this all over our members area for the past, tirelessly throughout the weekend, I think, as well, giving people updates. This here is Ethereum divided by Bitcoin. And so it's a multi-year chart, and you can see the few times we've had this happen, we had this situation where the relative strength of Ethereum, or the relative weakness, got so extreme that it ultimately would spring higher. So what we've seen yesterday was a big rally in Ethereum. So today, the ETH ETF, which we are long in many different products that you guys are likely subscribing to, and NBT and IBIT, but Ethereum is now showing a lot of relative strength. What the next chart shows, and I'm going to quickly share this with you here, is the absolute chart of Ethereum moving higher. So we actually think Ethereum could, I wouldn't be surprised if it goes to 5,000. It's kind of a simple number. So there's a lot of stuff happening here, and we've talked about it here in the show in the morning, and hopefully you guys have been able to take advantage of that. So I think Ethereum rallied almost 40 or 50%. Let me see what I wrote. Gosh, what did I just do? Shut down the whole app here. Here. So Ethereum rallied now since we made that call. Whatever. I think it's 40%. I'm going to say 40%. It might be a touch more. So, hopefully you guys have been able to take advantage of that since we talked about it here. That's the number one thing I want to show you. Then there's a couple of individual stocks that are also very closely tied to our favorite sector, which is materials. I want to get to healthcare stocks in a minute, but let me show you what's going on with CPER. Now, CPER, as many of you know, is the copper ETF, which we've been making a huge deal about. Copper is very, very bullish, but certainly long term. And in the short term, if anyone likes the short-term idea, we had a big move, and our momentum indicators were able to call that move before. For example, the tariff announcement on copper 2 weeks ago, I think it was, which was on the 8th of July, where copper had its biggest update ever. And so now it's exhibiting like a bull flag formation. So for those of you folks that like to just purely look at stuff from the technical perspective, which, again, I always warn that it's important to also keep it in context with some other analysis, but this is what you call a bull flag pattern. In the CPER ETF, or if you're a futures person, that works as well. There's some individual stocks that we like Freeport-McMoRan or Rio Tinto, which are large, metals, miners, and things like that. But CPER would be an ETF that kind of captures that entire theme. How high could it go from here? Well, if you're purely technically driven, and again, I always caution that a little bit, but purely technically driven, there's no reason why this shouldn't get copper once we see a breakout towards $37 or so. Again, keep in mind, copper can be very volatile, both on the upside and the downside, but that's one thing that we're watching in the very, very near term. Again, our bullish theme on copper is more than just the immediate term, but that's certainly something worth paying attention to. And then, copper really falls into the materials space. And so there's a stock, or a company, I should say, it's called Vulcan Materials. And I believe we mentioned it here last week or the week before. And I'm going to quickly just bring up a little bit of information here on Vulcan. I will just quickly warn everyone that this company does report earnings on the 31st of July, which is next week. So I don't hold trades through earnings, I will hold investments through earnings, and I'm kind of contemplating making this an investment. I'm not there yet. I have a lot of long exposure to materials through copper and all these other things. So I don't know if I really need to make an individual stock an investment too, since I have exposure to all the other things. But this is one that we really like. It's in the materials sector, which is to us very favorable. And so here is the chart of Vulcan Materials, if you're interested in that kind of stuff. it is, a chart. A chart is a chart. That's meaning like that's the only analysis that I'm giving you here. But again, we're very positively tuned to the material sector in general. Again, earnings coming up on the 31st of July. And if this were to move higher, this stock, one thing that you can do is you can take sort of the length of the previous rally and just add it to the top of where breakout would occur. So if a breakout were to occur, which would probably happen around just above $270 or so, if the breakout occurs, and again, this would be more like a multi-month or at least multi-week move, it's a 25% move to the upside. And of course, the risk is by not holding it through earnings, the risk is that the stock gaps up after earnings and does a good part of that move, but the stock could also gap down after earnings, right? So you have to kind of keep this in mind when you do these kind of trades. That's why it's one of the reasons I prefer to play these thematic things through ETFs and use leverage on ETFs. I think a lot more people are waking up to that. We still live in a gambling society of individual stocks. That'll end at some point. There's no doubt about it. But so, there's no reason not to take exposure in the individual stock necessarily. The question is, what's the sizing? So to me, an individual stock always has a lot more idiosyncratic risk than I think people are aware of. And that's something to keep in mind. By the way, silver just now popped. I just got an alert. You may have heard on my phone, silver popping up about 1.35% this morning. So hopefully everyone is still able to make money being long silver. And yeah, that's kind of where we are in this one. So anyway, if anyone has any interest in these kind of stocks, have a look at them, particularly Vulcan Materials. Again, earnings on the 31st of July. And yeah, that's what I want to cover here today. It's only Monday morning, right? The week is just getting started. Earnings are going to start coming out more fast and furious starting tomorrow. We've got tech earnings, Tesla and Intel and whatever, and Google and who knows what reporting earnings. So we'll see how markets react to this. I will tell you, I had another long bike ride with one of my colleagues this weekend where we talked a lot about kind of how markets are priced. We essentially think that the equity market is more or less priced to perfection. And that does not mean that they can't go up anymore at all, right? But there's a lot of risks here of things that could go wrong, don't have to go wrong. So I don't want to be short stocks, but I certainly want to be hedged. And I know a lot of people are not hedged, don't want to hear it. They're chart chasing things higher. And, we just want to make sure that everyone is aware of sort of the other side of that there could be a drawback a little bit here, at least for the short term. The NASDAQ 100, it has exhibited this parabolic move. Can it give more parabolic moves, after earnings? Of course. But again, we think the reward to risk is getting a lot worse up here. I've been saying this now for the past week and a half or so, I think. So I would just prefer to work on a hedged basis. So anyway, hope it helps, folks. Have a great start to the week. And we'll see you guys on the inside. Again, please give us a thumbs up, like, and subscribe to the channel. And we'll see you back here tomorrow. If you're in the boot camp, I will see you guys in about an hour and 10 minutes, I think. And you can still sign up for that 3-day boot camp here on that link I put into the chat box. So thanks for being here. I'll see you back here tomorrow at the very latest. And if you're in the boot camp, get ready for an awesome 3 days. I'll see you guys in about an hour and 10 minutes, or 40 minutes, I think it is. Take care.